Good afternoon. Welcome to GrainTV. My name is Cody Bills. Logan Burgess. Today is September 12th, and we had a mostly quiet day here in the grains. Let's turn our attention over to the iPad here. Corn trading down 2.5 cents. Soybeans trading up 3 1/4. We had Chicago wheat down 6.5 cents. Logan, what's the reason we had this quiet trade?
You know, really lacking news, I guess, today. Really nothing to push the grain market one way or another. We did find a little bit of strength by way of frost concerns coming into the market. If you take a look at this map here provided by NOAA, you can see that areas of Nebraska, Minnesota, and even northern Iowa are under a frost advisory right now. So like I said, there was some chatter about that. Has seemed to be firming things a little bit, but really not the kind of freeze event that is going to help stop the bleeding here in this grain market, particularly in light of the fundamentals that we got yesterday from the USDA. If we look out a little bit further here, it looks like we should have a cool later part of next week, the 17th into the 21st. And then starting September 21st, though, you can see that relatively unseasonably warm temperatures should be seen across the northern grain belt. So looking forward, I guess, I'm not looking for a big freeze premium to be put in next week, but it is going to be interesting to see how the trade opens up Sunday night. The frost that we had today in part of the grain belt is going to continue based on these models into tomorrow. So as I said, take a look at the grain market Sunday night. A great way to do that is by using the iPad that we showed there at the beginning of GrainTV.
Absolutely. Now, yesterday we did have yield numbers out here, but today we did have some export sales. You know, one of the things we saw a huge amount of production revisions.
Yep.
Today we did get some export sales here. It's making you wonder whether or not there's buyers out there looking to take advantage of some of the price break that we saw yesterday. But exporters ended up selling 116,000 metric tons here of soybeans to unknown destinations for new crop delivery, and we also saw another sale of 131,000 metric tons for new crop delivery to export or unknown destinations. So two nice reportable sales here early on.
Yep.
We had nice reportable sales early yesterday.
Right.
Traders kind of brushed those off looking at the WASDE report. But Logan, where do you think we're going to go from here? You had nice export sales this morning, but is that going to hold us up?
Yeah, well, you know, we've been looking at this chart here for quite a bit now on GrainTV, and this guy, I think, does a good job of setting some of the chart landscape for the November soybean contract, because obviously we've seen an exceptional sell-off over the last 2 months. But the question now is, where do these prices stand kind of in more of a historical context as we're returning to a more typical stocks-to-use environment around 13% that we haven't seen since really 2005, 2006. As you can see here from this chart, if you're looking for support on the chart, it sits around $9. That was from an area where we really traded sideways in during 2009, 2010. So in light of the numbers that we got yesterday from the USDA, I think that $9 is going to be the next stopping point here for this soybean market. We really saw $10 really lend no support to the November soybean contract, and right now not a lot of chart spots here to look at as we look at a market that is still very controlled by the bears, and nothing looks like it's going to be changing, as I said, based on the yield numbers, based on the production numbers yesterday from the USDA.
Absolutely. It is very interesting when you look at the basis environment and you look at soybeans here. Old crop, which has held a relatively strong premium here over new crop. You know, we saw it in the cash market. What we're seeing now is that basis, that very strong basis that we've been observing through the later part of August and the earlier part of September. We're seeing that basis kind of get sucked out of soybeans here. On average, we were down 38.5 cents across the U.S. In terms of basis, and soy plants were down 35 1/4 here this week.
Right.
We saw a number of key facilities drop basis significantly. There was one area in Council Bluffs that were plus 100 on the December contract, or excuse me, plus 100 on the November contract, and we saw that drop to minus 45 on the November. So huge basis swings here. We are seeing that premium sucked right out of soybeans.
You know, and one thing that kind of relates to the cash market, kind of relates to what is still old crop soybeans. We are going to be getting NOPA crush numbers out on Monday. If we look at the average analyst expectations for that report, around 111 million bushels expected to be reported during the month of August. If we look at stocks, relatively light stocks, 1.35 billion pounds expected there. If that is realized, that would be the lightest total since February 2005. So, you know, that should, well, I guess it may not lend a little bit of support to the bean market. It's been kind of a known entity that we were exceptionally short on old crop soybeans, so not a big surprise that we're seeing tight stocks here at the end of the market.
Yeah, we'll just have to see how that report pans out here. But thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472 4607. Remember, you can go to our website at grainhedge.com. You can have a 14-day free trial. You can view live quotes on your phone. You can try it out, see if it's right for you. Futures trading is not necessarily right for most or for a lot of producers, but it is right for a lot of producers that are looking to manage their price risk. So do give us a call if you have any questions. Again, number 877-472-4607. Have a great weekend. We'll see you on Monday.